Thank you, ladies and gentlemen, for staying the course, and pleasure to be with you. Today, I'm going to, given relatively limited time, I'm going to focus on the structure of lithium markets, what it means to be an active participant in the battery raw materials supply chain. A very important distinction there as the industry skews toward battery materials as opposed to historical legacy supply base, greases and ceramics, that type of thing. And also an outline as to how we're going with respect to the construction of Stage 1, where we expect to take the Stage 2 project, and as a result, the opportunities for the company to continue to keep growing. So the main game is the development of the Pilgangoora lithium tantalum project. Tantalum being an important byproduct credit, the tantalum coming out at the same time as we're mining the spodumene raw material. We're building the mine in the Pilbara, fantastic location, steeped in mining history, well understood by the regulator, great infrastructure base to draw from, almost as good a place as anywhere in the world to be building a significant mining operation. And we've got some serious scale, and out of that scale comes a relatively big production base in an environment where we would argue the market is just going nuts, and for the moment, in the foreseeable future, we find it hard to believe that the market is going to be satisfied. And again, I'll come back to that in a bit more detail. So that's the Pilgangoora project. We've taken a really disciplined approach to the project's development. Very, very structured feasibility work, significant drill programs, major metallurgical test work, diamond drilling, and the only operator to have actually built a pilot scale plant before we finalised the design. Incredible learnings for our team, who in their own right are lithium experts that have come to join us, but having them run the pilot plant has delivered some fantastic learnings for our people and therefore giving us confidence as we move into the commissioning and the ramp-up cycle at Pilgangoora. And then, of course, the opportunity to keep growing, leveraging the demand from the market and the significant scale in the Pilgangoora resource. Now, with respect to what we've done in offtake, perhaps sort of running contrary to Bryce's previous comments, we'd argue that the offtake is incredibly important. And in our case, we'd like to think that we've got the opportunity to have our cake and eat it too. Long-term offtake with outstanding partners, really, the cream of the crop of partners available in the lithium industry, and the ability to take a floating price for our raw materials. So, spodumene delivered into the market under long-term offtake agreements priced against battery-grade products, which is where we'd argue the squeeze continues in the lithium world for the foreseeable future. As to the partners, General Lithium, Ganfeng, Great Wall Motor Company, absolutely central to the long-standing battery industry in China. People that are already qualified, already delivering battery-grade products, and for example, in the case of General Lithium, ultra-high purity hydroxide and carbonate products, primarily for electrolyte products in lithium-ion batteries. And then in the case of Great Wall Motor Company, a car company that is heavily invested in electrification, hybridisation of their offering to the marketplace. They're China's largest SUV maker. More recently, dealings with POSCO. POSCO is as good a partner as you could ask for, deeply integrated in the battery industry, already selling battery-grade hydroxides to the Korean markets, and very, very long-standing investments and R&D in the lithium world. A very big push coming from POSCO to become a major player in the global lithium industry. Those partners don't come to your project by accident. They know exactly what's happening around the world in the lithium raw materials sphere, and they have chosen to participate in our project because of its quality, its longevity, and its relatively low cost base. So out of those things, we think we've got a fantastic group of off-takers that are really important to the future growth of the company. Apologies for the sort of slightly detailed slide, but the grouping on the left-hand side relates to the off-take position in Stage 1 with General Lithium and Ganfeng, and then on the right-hand side, Stage 2, again, growth with Ganfeng, Great Wall Motor Company and POSCO. That offtake position is the world's largest offtake position in lithium raw materials. It's over 100,000 LCEs. And as I said, the reason that happens is because the right counterparties have looked across the globe, looked for the most significant projects, and obviously chosen Pilgangoora. And for that, we welcome their involvement and welcome the relationship with those key counterparties. Another important element to our future growth strategy is to be an active participant in downstream chemical facilities. Now, we don't pretend as a mining company that we can be experts in chemical activity, but what we can do is underwrite those facilities and leverage the value in our spodumene into higher value battery grade products. And that's exactly what we've done with POSCO. That'll be the first of our participation in the downstream chemical world. We're co-invest. Our expectation is that we will co-invest with POSCO in a new chemical facility in Korea during 2019, and it'll be commissioned from 2020. So again, fantastic opportunity, we believe, for our company. We have similar options with Great Wall Motor Company and with General Lithium. And we're actively considering how we deal with those options, and it might very well be that we continue to invest in more downstream facilities. Time will tell in that regard. First cab off the rank, leverage the relationship with POSCO and get into their fantastic technology and near-term chemical facilities. So moving on to the lithium market, you've heard the story. You've heard the story about the battery world. I'm not going to replay that to you. Suffice to say that from our point of view, helicopter view across the industry would be to say that everybody is underestimating how quickly North Asia is moving. So I'd group China and I'd group Korea, and I'd say no one in the analyst community is really getting it right as to how quickly they're building out the lithium ion supply chain. And there's no really more evidence than that as to the facts. This is really the numbers coming out of China as an example. So this is a representation of the structure of lithium raw material markets in China. Moving from left to right, you have the imported product to China, where it comes from, how it gets consumed internally, including the little pieces of local domestic supply, and then the export market. But really the key salient fact is to say that in 2016, China was already easily the world's largest lithium raw material market by some way, consuming most, or certainly the majority, of lithium raw material supply globally. But in 2017, in the calendar year, the market grew by 50%. 50% in a market that was already the world's largest market. Now, if that's not extraordinary growth, I think you'll be struggling to find it anywhere better than that. So they are moving incredibly quickly. They are growing their consumption of lithium raw material at a frenetic pace. That is easily more than double people's estimates of lithium raw material consumption. Most of the analysts would peg it somewhere between about 15 and 20%, and yet here's the world's largest market growing by 50%. In cathode materials, so that's the aggregate supply of lithium, typically dominated by lithium, nickel, manganese, cobalt, it grew by 100%. So there is just this incredible push going on in China throughout the lithium ion supply chain that is being grossly underestimated by the Western world. We get, a somewhat privileged position. We get the chance to see this happening in real time because we're deeply integrated with them. They want our product, so they're keen to tell us about how they're going to deliver. And I can tell you, they're moving much faster than people are giving them credit for. And the same thing is true in Korea. Again, another anecdote to describe the dynamic. We were lucky enough to be negotiating head-to-head with LG Chem and with POSCO for the last of our stage 2 positions in offtake. And as part of that process, they share their expectations as to where they take their lithium raw material business. Both had a very similar objective. They both want to achieve about 100,000 LCEs in the range of 2024 to 2025. And here we are with just 30,000 LCEs So my question to them is, well, where is the other 170,000 tonnes going to come from? Really, where is it going to come from? You know, we're already the world's biggest offtake position, but we've only got 30,000 LCEs for you. So I guess my point is that there is no Western analyst that would have that in their model. None. Not even the first 30,000 that we're selling to them for their new chemical facilities in Korea. So what about the rest of it? You need to plug that into your models. That's my advice. So anyway, it's happening quickly, and obviously we are going to be a beneficiary, as is Western Australia as a whole. So that's the China story. To just quickly drill into quality. Quality cannot be underestimated, and it's a big change going through the lithium raw material supply base. The shortest cut I could share with you that I think raises the most relevance is to say, most of you understand the iron ore game, so I'll talk about it in that context. The Pilbara has got used to producing iron ore in the range of sort of 57% iron to about, say, 60% iron. And that's become the norm. That's the way the Pilbara works. But what's happening in lithium raw materials is like asking the Pilbara iron ore producers, within the space of a couple of years, I'm sorry guys, that doesn't cut it anymore. I want you to produce 64% iron. That's exactly the dynamic that's happening in lithium raw materials today. Everyone has to lift their game, and there are those that will be successful and there are those that won't be successful in meeting the market because of the battery demand. It is a really fundamental change, and not many people understand how that washes through the industry. Well, it just so happens that one of the beneficiaries is hard rock or low-cost hard rock supply. Now, why is that so? Because low-cost hard rock supply is the lowest cost source of hydroxide lithium products. And why is that important? Because the world is moving to high nickel cathodes. They are the next generation of lithium-ion battery technology. More nickel, less cobalt, basically the same amount of lithium. The benefit in that model is lower cost of raw material inputs, but also higher energy density. So the world is naturally gravitating to that model. And as a result, more lithium has to come from hydroxide raw materials. The lowest cost product to hydroxide raw materials is hard rock source supply. And as a result, Australia as a whole is a net beneficiary in the lithium world. And as a result, I think the dynamic that plays out in the industry, I'd argue it's already happening, less brine growth, more hard rock supply to meet that hydroxide demand. Another spin-off is that the stability of the hard rock supply is much, much better. It's better in terms of continuity of supply. It's not subject to the vagaries of the weather. It's a more stable product after chemical production. It doesn't vary by those incremental degrees, and as a result, the battery makers are skewing towards it. Last salient point in this regard, the brine operators, it should really be a case of do as I do, not as I say. The big brine operators are now deeply invested in hard rock. In fact, I'd refer you to Albemarle's results in the last 24 hours where they talked about their expansion plans, and by far the biggest expansion from them comes in hard rock operations up to 2025, much more than brine operations, and I think that tells you a lot about the direction that the market is taking, given that brine source supply was their historical genesis. So yeah, that's important. So when you rewrite the playbook and you think about the new world of battery grade supply, you need to rethink your cost base, because basically everybody would have the brine operations in the lowest half of the cost quartile. The truth is they're all jumping up the right-hand side of the curve, because there's post-mining or post-production costs that need to be added to their product to get it into the battery world. It's a very real dynamic. So at Pilgangoora, we're into the DSO operations. We've well and truly got into the ore deliveries. We're making our sales basically this month, and that program will continue to grow over the next 12 months or so. But at the stage 1 concentrate project, we're right on the cusp of the commissioning. Crusher commissioning sort of imminent in the next week, 2 weeks, and the plant progressing thereafter. And it is absolutely the case that we'll have some product on the ground by the end of June, and then ramping up the plant's capacity in the second half of 2018. A very, very exciting time for the company, and you know, fantastic to see all the fruits of our labour. Last thing on quality, Pilgangoora, an amazing spodumene resource. The only other spodumene resource really of any material scale globally that can produce high value spodumene products. And by high value, I'm referring to the specialty glass and ceramics subset of the market. That tells you that you're dealing with a really clean spodumene, a product that is very, very high value or high quality. In our pilot scale test work, we were producing 7.2% lithium products, ultra low iron, that fits the specs of the Cornings and the shot glasses and the Kera glasses of the world. So we're very, very pleased with the outcomes in those project streams. Stage 2, is in essence more than doubling capacity. We take processing capacity from 2 million tonnes per annum to 5 million tonnes per annum. The pre-financing work's been complete. The customers are on the hook for the construction costs in stage 2, and they are required to fund to achieve their full offtake position. So fully financed for the development of stage 2, and it also happens quickly. We're making some pre-commitments now, but we should be commissioning the stage 2 project from the third quarter in 2019. So fantastic opportunity for our customers and obviously our shareholders. So at Pilgangoora, in Pilbara Minerals, incredible mineral endowment at Pilgangoora, very, very clean spodumene, one that creates a high grade or high value product, including technical grade product, but at the very least matches the benchmark in the lithium world of 6% lithium and low iron. Great customer base, supports continued growth at the project level. The financing's all complete, and we are now right on the cusp of commissioning the stage 1 project, having done the hard yards financing and building out the stage 1 capacity. We're very much looking forward to demonstrating to shareholders the first product off the belts over the next couple of months. So, ladies and gentlemen, thank you very much for your time.